This is Angel Insights, brought to you by SyndicateRoom. On today's show, I'm delighted to be joined by Paul Townsend. Paul is currently Managing Director at Vitesse PSP, and he's also a non-executive director with Saxo Bank, following over 20 years of experience in mainstream banking with the likes of Warburgs and the Bank of New York, plus 15 years in electronic payments with Earthport PLC, Neteller, Envoy and Worldpay. Before co-founding Vitesse, Paul was also founder and CEO of Envoy before he exited to Worldpay. He's also a prolific angel investor, with investments in the likes of Kwanji, veridu, proxama, and many more. However, enough from me. So, ladies and gents, it's time to dive into our chat with Paul Townsend, Managing Director at Vitesse PSP. Paul, welcome to Angel Insights. It's a great pleasure to have you on the show. Thanks so much for joining us today.
No, that's good. It's good to be on, actually.
Can you start off by telling us a little about yourself and how you made your entry into the investing world?
Yes, so I was initially in banking for about 20 years and then took some time out with my family and got involved in online payments back in 2001, e-commerce payments. And then in 2006, I started up a company called Envoy, which was sold to WorldPay in 2011. And out of that, obviously, we got some money out of that after sort of 5 years of working with the business. Mm-hmm. And from that, I started investing in guys that I knew in the market and just people that introduced to me, various investments, but mainly in the fintech space, but there were some others as well.
And so when you started, did you start with a group of kind of syndicate investors who you followed, or did you very much go off on your own?
No, well, there was actually two. There was some guys that worked for Rothschild's investment bank that were doing some investing,
okay.
And they brought some things to me, and then others were just people in the market that just knew about the exit and just wanted to have a chat about what they were doing and wanted me to be involved.
And when you look back now, have you noticed your strategy's changed quite a lot in terms of how you view and invest in startups?
No, I mean, I think I'm not sure I have a strategy as such. What I tend to do is invest in the people involved rather than the actual idea as such, although obviously you need the idea to make sense. But in the main, if I'm investing, it's because I trust the people involved, or I've got some respect for the people involved in the relevant sector they're involved with. So it might be that they're involved with data and their background has been data, or it might be that it's prepaid cards and they've got background in that market. So it's normally to do with the people rather than the actual business itself necessarily.
And with Envoy and then 20 years in banking, you have quite, obviously a very strong background in finance.
Yeah.
Has that led you to invest heavily in fintech, or do you vary your sector investments?
So in the main, when I've invested in, I don't know how you define fintech, but mainly within payments and within data, those type of areas. Mm-hmm. I have diversified out in the sense that I gave some money to MMC investors, which basically invests EIS money on behalf of other individuals. And they've invested me in things which I would not normally invest in.
They were Gusto, weren't they?
Sorry?
They're Gusto, aren't they?
Yeah, so I'm an investor in Gusto through my relationship with MMC. I'm also an investor in Love Home Swap through them. So they take me into areas where perhaps historically I wouldn't, I don't know people in those sectors, so I wouldn't necessarily invest in those sectors. Mm-hmm. It's only because of my relationship with them I've got involved in those type of investments. And I actually know some of the people at MMC quite well now. So, yeah, I think it's if you're going to do something outside of the sector, sometimes it helps to have someone validate some of those business models that perhaps I couldn't do on my own. Whereas in the fintech space, I'm quite confident in, knowing what goes on, if you like.
And when you look at the kind of landscape of mobile payments, how have you seen it evolve and develop over the years? Now we see massive, obviously, Square and Izettle. Do you think we are moving to a monopoly marketplace for mobile payments, or do you think there's kind of much greater scope for many players?
Yeah, I think it's still going to be. I think there will be concentrations, things like Apple Pay and mobile. But I think there'll be lots of. Depends what you mean by a mobile payment. There's often different types. So I think the space can support more than one provider, but maybe what they're supporting is slightly different. So it might be around, data connected with payments. So going into stores and how goods are presented to you on the phone, and then you buy and you're doing the payment as almost a secondary stage of that integration, if you like. So I think that space is still open to a lot of activity. The trouble with mobile is you do need to have quite big volume to make it a success. It's quite a hard market to actually, to make money in. I think that's the problem. That's why often the bigger boys have more of an edge, if you like. But I think what you'd see is probably some of the bigger guys buying smaller companies for their technology. And that's probably quite interesting.
And we said, obviously, mobile payments there is quite a diverse market. Where do you see, then, real room for innovation in the mobile payments space?
In terms of, I think in terms of the way people are approached to pay online, things like how they use your data on a mobile and how they present, loyalty to you and ideas to you is probably more of the innovation. The actual payment piece, I think, will be relatively... will probably follow a similar path to the way things happen now. But I don't know if you know people like FlyPay.
Yes, yeah.
Restaurants. That's quite a clever idea. So that's sort of making it easier for the consumer to pay. The actual payment method itself is actually a standard payment method. It still goes through the standard acquiring networks and through the various banks. It's just the way the way you get to the payment event is slightly different.
What are your thoughts
I think that's quite interesting, those sort of ideas.
What are your thoughts on Bitcoin? I mean, it's seen obviously a massively volatile price.
I mean, maybe because of my banking background and the fact that I spend a lot of time, my current business that I've just started is very heavily involved with banks still. Banks are still quite sceptical of Bitcoin, and so I suppose I have a natural tendency to be conservative. However, I do think it has a place. I think some of this blockchain activity that's going on, I think it will develop. I'm not sure it will take over and replace Visa and MasterCard, those type of things. But I think it definitely has a place, maybe more in institutional transactional flows initially rather than with the consumer, if you like. Because I can see that there's ways of securing transactions in that corporate world that may have some benefits and cut costs for businesses. But I think it will have a space. I think it's too early to tell whether it's going to be truly mass market at the consumer level.
And with those corporate benefits, why do you think banks are so sceptical of it? I mean, banks must be considered one of the major barriers for mass Bitcoin adoption. So
yeah, I think banks at the moment, particularly the larger banks, are very nervous about money laundering and too much risk profile, not having visibility of, the consumer has the consumer identified. So there's still a lot of concerns around how people are identified and making sure that they're not doing anything they shouldn't be doing. And I think that makes banks naturally nervous, especially after what they've gone through over the last few years. And banks are very paranoid about, certainly in London around fintech, but I think even globally, getting a bank to work with you is often the hardest stage when you're setting up some of these companies.
And you mentioned going back there about MMC Ventures. Obviously, then you're an LP in MMC.
Oh.
So it's a very interesting topic then, who funds the funders. And in the US, institutional investors and endowments are a lot more prevalent than the UK. Why do you think this is? And do you think it's something we should be concerned about?
No, I don't think we should be concerned about it. I mean, the London market seems to me to be very buzzy at the moment. I mean, there's no lack of funding. I don't think if you know where to look. I think probably in Europe the gap is, I think as you go up for the first million, you're probably okay with angel investors, and then if you want to raise 20 million, there's a whole group of PEs around. I think it's in that sort of the 2 to 5 million level where perhaps it gets a bit more tricky, and that's where MMC started to sort of come into some space, and there are some other PE firms around. So I think Europe is catching up with the US in terms of availability of funding across the whole spectrum of funding.
And
but it'll take some time, I think.
Do you think there's anything that can be done to change the risk-averse mindset of then the European institutional investors? Do you think they need the big European successful IPO?
Yeah, maybe. I don't spend enough time with those people to know what would change their minds. I mean, I tend to spend most of my time with other, angel investors, and because of my exit was to Advent and Bain, effectively to WorldPay. Obviously, I do spend some time with other PE firms now that are interested in the fintech space. But there's definitely this gap around that sort of mid-sized fundraising.
And you said that you spend a lot of time with other angels. What do you think makes a great angel? I mean, what makes you really impressed by one over another, say? Is it...
Well, I think some are very organised in their approach and doing a very structured manner. I mean, my angel investing is a bit more, I meet the people, if I like them, I tend to invest, and I do quite a wide range. Others will take a lot of time and analyse the business before they invest. And I suppose in some ways those people are probably more likely to have success because they've done more analysis, whereas mine is much more of a, do I like the guys, do I like the idea, and then I'd move forward.
Do you have a form of DD, though, that you go through beforehand?
No, I never have. I mean, what I tend to do now is all the people that I've invested in are generally people that I've known for a number of years, so it's very rare. I mean, there are some which I've invested. I recently invested in a company called Veridu. I don't know if you've heard of them, but they're quite an interesting company. It's all around social media data, and with them it was an introduction. But in the main, I would invest in people that I've known for some time.
So you don't actively deal source?
No. I mean, normally people will come to me and say, "You've got this idea. Would you be interested?" I do get some cold calls, and I've got a couple of those meetings this week. In those ones, it's whether I think whether the idea is really stacks up, and then it's just trying to make some value judgment on the individuals involved.
And we also said earlier about, you said there's no lack of funding available in London. Does that make it harder then for you as an angel to differentiate yourself amongst the massive capital that is going into very early stage stuff?
I think there's money there, but I think most people always will raise more if it's available, if you know what I mean. So I don't think there's a lack of opportunities for angel investors. I think some of the challenges around valuations can be quite aggressive these days, and sometimes that can be off-putting. But in the main, I think, there's certainly been no lack of things put to me that I can invest in now. That's not really a problem.
Do you focus very much on valuation when investing? I mean, a lot.
No, I don't actually, because I tend, well, unless it was ridiculously high, but it hasn't been. In fact, most I invest in already seem to be a sort of quite a reasonable valuation when I invest, but you do want the founders obviously to have a stake, so you don't want to be you don't want to take 50% of the company and they don't have anything. So it's when I watch Dragon's Den, I'm always quite shocked about some of the sort of valuations that they get these guys to invest in. They seem to get a large chunk of the company. No, I'm quite relaxed about the valuations as long as they're not silly. It's more about whether that valuation can go up and and be worthwhile in the longer term.
And what stage do you like to go in on then? And what kind of equity stake do you look for? We said about Dragons, and I agree, sometimes they are 50%.
Yeah, so I tend to do EIS in the UK. I tend to go in very early, or I have with the ones that we've done so far. I don't do very large sums. I do quite sort of reasonable sizes, so it spreads that risk a bit. Yeah, that's it really. So very early stage, and I don't normally go for a percentage. I just normally go for a value that I'm happy to invest. And the way I invest is that once I put my money in, I sort of write it off to start with, so that I'm not, worrying about the fact, what's happening with that investment. It's very much a high risk. Put the money in and then drop it, and not worry about it, and then just meet the guys on a regular basis, see how they're going on. Really, some will want more of my time than others. Some are just happy to have the money. Others actually want me to make introductions and get more involved.
And do you like to be regularly updated by your investments, or are you perfectly happy for them to go off on their own if they so wish?
Yeah, I mean, because of the guys that I've invested in, I sort of know them. I naturally meet them anyway, so it's not that I have to say let's have a regular meeting. In fact, in a lot of the companies that I've invested in, I'm also working with them on from my own new business as well. So my business is engaged with them as well as me being an investor. So I tend to meet them on a regular basis anyway. And the MMC ones, obviously, they have regular forums that you meet them, so they sort of arrange it for us, if you like.
And then, having heard the kind of investment process for you being very people-focused, can you share with us an investing story, maybe an investment that didn't go to plan, and how that kind of altered your investing approach? Yeah, so
how many have I got? I must have about 25, I suppose, investments. Well, there were two. I wouldn't say they went. I mean, they went wrong for me personally, maybe, but they didn't necessarily go wrong badly. But there was one that we invested in, which was a very high tech company. Had spent a lot of money developing this idea, had lots of patents, but just didn't have some of the capability in terms of production or knowledge around that. Mm-hmm. So in the end, they ended up selling to a much larger corporation that already serves the market. And obviously, in that sale, we didn't get money out, or we didn't get all of our money out. We got most of our money back, but not all of it back. So that was probably one of the things that happened to me. The other one was a company that was online and probably. Again, around capability, they put in a new ordering system that went badly wrong. It lost them a lot of money. They had to sell to their biggest competitor, and in that process, the shareholders, didn't get repaid. So I suppose in terms of how that's impacted me, systems and how scalable they are, and is there a big change coming? Maybe would be the only thing that perhaps I'd be a bit more focused on.
And from that experience, is there anything that you'd suggest investors should be aware of before making investments?
Well, I don't think I'd give them any basic principles. I think when you're investing in these sort of companies, it's very hard to tell what's going to go right and what's going to go wrong. And they might start on one path and end up down a totally different path by the time they actually come to sell. Mm-hmm. And in some ways, Envoy did that. It started down one path and ended up down a slightly different path. So I think it's very hard to give people advice on that. I think one of the reasons I invest in the people is that's probably the constant thing that is going to be there. The systems may change, and even what they're selling may change in some ways. But I think if you trust the people, and the people are bright guys, they generally work it out, and based on what they need to do. And obviously, their interests are more aligned with the business than mine because it's their livelihoods at stake.
And I'd love to discuss one of the investments now that you've made recently. An interesting portfolio company of yours, Kwanji.
Yeah.
So how did the investment come about? What did you see in them, and why did you say yes?
Yeah, okay. So I've known William Lorenz, who's one of the founders, for a number of years in his previous employment or previous role that he had, which was another company that he was involved with. So William spoke to me about it just in terms of the idea and introduced me to his co-founder, Leslie. The nice thing about having more than one founder is sometimes there's a balance between individuals. So the nice thing about that combination is that Leslie's probably the more sales type person, whereas William's a much more organised, sort of administrative type person. Mm-hmm. So I think that balance of individuals was quite interesting to me, because I think William on his own maybe wouldn't be the sort of driving sales force, and I think Leslie on his own would not have I'm sure he can do it, but William brings a much more sort of stronger administrative sort of control over the business. Mm-hmm. So the combination of those two is interesting to me. Also, the idea was it was sort of around this change in the market away from banks doing payments and foreign exchange, and it being like an open marketplace where there was a panel of FX providers that companies could tap into. Mm-hmm. And also they were looking at more of the emerging markets type stuff, and that's certainly somewhere they're sort of focused now towards more Africa and places like that, Kenya in particular, I think. So I suppose it was a combination of the people. The idea, it was an area that I understood. My background has been, I used to manage foreign exchange at Bank of New York, the operations there. So it sort of fitted for me personally because I understood the model, I knew the people, and then the idea seemed like a good idea to me, although I don't understand all the technology behind it because I'm not a techie person, but the actual idea and the concept seemed like a good idea. So that's why I invested. And I think I've done 2 more investments since my initial investment in that company. So
do you like to do follow-on rounds in your original investments?
Yeah, I don't always follow. It depends on the size and the valuations, but there's been a couple that I've followed through, and Kwanji's one of the ones that I've followed through, and there's a couple of others that I've done that to as well.
And you mentioned
just starting to about the third one, I think. Yeah.
You mentioned there your interest in the emerging markets and Kwanji's entry into the emerging markets. Yeah. You've also invested in Gale Creek.
Yeah.
Are you bullish on the emerging markets then, and the potential for technology to kind of scale and revolutionise them?
Yeah, well, Gale Creek's very much focused on Vietnam, and that's a very big growing market in lots of ways. So they're sometimes harder to see how you get the exit, maybe, but it'll probably be acquisition by a bigger player in the wider space. But yeah, no, I think Africa. I mean, I went to Lagos last year, to Nigeria. There's a lot of energy there. There's a lot of people, and there's a lot of room for for more business to be done, certainly online and e-commerce. So I think those areas can be interesting going forward, which is part of the reason I mean, Kwanji is definitely focused on the African market at the moment, and Gal Creek very much on Vietnam.
And if it's okay with you, we're going to dive into a quick fire round now.
Yeah.
If you could give founders one piece of advice, what would it be?
Be honest.
The hardest aspect of angel investing for you?
Losing my money.
Mobile payments. Square, Izettle, who do you predict?
Square.
How do you measure your success as an investor?
Well, I think it's important for me that they are successful, but also just the fact that part of the reason I invest is because it's almost giving something back to other people to allow them to do what I did. So if it was successful and didn't necessarily sell for a lot of money, but it was successful and employed people, that would almost be rewarding itself without sounding too pious.
Your investing ethos in a sentence?
Things I understand generally and people that I trust.
And then your most recent investment and why you said yes.
My most recent investment was veridu. The guys are very interesting, out of Denmark, out of Copenhagen, based in London though. Social media data, using that data to prove a person is that person, so it's how many hours you're on Facebook and stuff like that. So it's an interesting area that I think has a lot of applications for online sites.
Well, Paul, thank you so much for giving up the time to be on the show today. I'm so grateful, and it was absolutely fascinating to chat to you.
Great, thank you very much.
What a fantastic chat that was with Paul, and a huge hand to him for giving up the time to be on the show today. But before we leave you, we would like to thank Plantronics, the global leader in audio communications for businesses and consumers. They've pioneered new trends in audio technology, creating innovative products that allow people to simply communicate. From unified communication to Bluetooth headsets, which we're using here at SyndicateRoom, to gaming solutions, they deliver uncompromising quality. Plantronics is used by every company in the Fortune 100, as well as blue lights, air traffic control, and various mission-critical applications for those on the front line. And moving back to the interview today, if you would like to stay updated with all the news from SyndicateRoom, you can follow us on Twitter at SyndicateRoom. As always, thank you so much for your support, and we look forward to seeing you in the next episode.